Hello everyone, welcome to the Ichimoku charts.com daily analysis for the SP 500 for Tuesday, July the 6th, 2010. Well, a change of trend today, and we have a candle that made a higher high and a higher low. Previously we had a very strong first time frame downtrend, which traded all the way down from around the 1130 region down to 1018 without a change of trend to the upside. We've had a couple of inside days in there and a few indecisive candles, but today we have a change of trend. Finally, a higher high and a higher low. Unfortunately for the bulls though, there is no body to this candle. This candle is opened and closed in exactly the same position, mid-range. That's between the high and the low, and that is not a bullish candle. It's not the sort of candle that you want to see beginning a trend to the upside. So we have a lot of doubt about whether this rally will continue. Now, if we're just looking at the where the market closed in relation to the previous close, yes, it closed up. So the buyers did show some keenness, but the fact that we have this long shadow on the top of the candle and a long shadow on the bottom, with the buyers and the sellers making no net progress between the open and the close today, tells us that there was a lot of indecision in this market. So once the market traded up to this area of resistance that we identified previously at 1041, the sellers came in and sold the market off, and then as the market attempted to test this 1018 level and just below, the buyers came in and bought the market back to close it at around the same level. So it's a doji type candle, so this offers potential for a change of trend back down to the downside. That means that the low of the current candle becomes very important over the next few trading days. If there is to be a lower high and a lower low, that area will need to be taken out. Now, obviously, the support extends all the way down to 1010, so we do need to watch down to that area for any potential continuation of the trend in the second time frame to the downside. Now, having said that, though, there isn't any bearishness in this market either. All of the bearishness we had from this area up around 1130 trading down to around 1018 with all of these red candles except for one has disappeared, and we have this doji type candle. So that's, by the same token, not supporting the previous bearishness in this market. So that could be a positive for the bulls, although, as I said, no bullishness. Now, if this market does continue to rally, and there is a possibility that it will, just because we have an indecisive candle, it doesn't mean that the bulls won't come in eventually and trade the market up. But there is some good resistance offered overhead, and obviously this 1041 region, we do need to watch that for a potential higher high and higher low and continuation of the trend. But also the area where the Tenkan-sen is, that's the green line here, the fast line, that's at 1055. That will offer some fairly strong resistance to this market if it does trade up to around that area. Now, that's been pointing down quite sharply, and that's reflecting the very strong downside momentum that there was in this market. If that area fails to hold to the upside, then we have fairly strong resistance being offered at 1071 at the Kijun-sen, the pink line, which is the medium-term line. And interestingly, that's pointing flat, and quite often when that turns flat, we tend to have the market price attracted back towards there. So that represents equilibrium in the medium-term time frame, and what we've had here is the market becoming overextended. It's in disequilibrium with regard to its trading position compared to the Ichimoku indicators, and the market will potentially move back towards equilibrium as defined by this medium-term line, the Kijun-sen, around 1071. So there is a very good possibility that the market will break this 1041 area and trade back up there, but we do need confirmation of that. Now, in the big picture, though, the market is still trading down below the cloud.